Good morning, all. I'm just waiting for this to go live on TradingView, and then I'll kick off and jump straight into what I'm looking at, why I'm looking at it, and what I'm thinking next. So hopefully this is live. It's suggesting that it is, so I'm just going to kick off. So in terms of Bitcoin, what I really want to do is just emphasize what I've been saying since March, really. I think in terms of these particular moves, my sentiment still really hasn't changed overall. And I just wanted to share this little bit with you just to explain what it is that I'm seeing. So if I start by going back into March and we come down to my profile March the 18th, you'll actually see why I was calling this particular call with a bit of a zigzag type pattern down to a potential fall. Now, it was this assumption that made me think this was potentially a weekly move overall. And coming up to the 26th of March, I believe, this one, I was actually looking at this move as a roadmap call, weekly 3 down for weekly 4, taking us to a new all-time high, completing a weekly 5, which would only equate to a monthly 3. Okay, so that was the option, that was the move there, and you can see this going back, like I said, the 26th of March. You'll actually see some logic as to why. I'm not going to go into the details as to what the shallow and the deep actually mean. It's something that we teach within Discord. So, in essence, coming on to this kind of factor, I'm not too concerned whether or not it's still weekly or monthly. All I'm looking for is kind of an overall bias. Now, as a longer term trader, I'm looking for a kind of buy and hold strategy rather than something to get in and out of day in, day out. So, to start with, what I'm going to do, I'm just going to show you this in terms of the current Weiss situation. I'm just going to stick the basic on here. Now, in kind of general terms, or as quick as I can in terms of explaining this, we can actually see that this is our wave 1, this was our wave 2, this clearly the wave 3. And if you can see, I'll just zoom out a little bit there. If you can see across there, you'll actually see what we're seeing is this move giving us the high, coming down for an A, and actually back up for a B. Okay, there's not a lot of volume there at the moment. It's looking relatively rounded rather than something that's shifting up the same as this one. So I don't really feel that we're currently in the move for a 5 yet, from a 4 to a 5. Okay, so the assumption would be something like this rather than something like this from this move. Now, there's lots of talk on Twitter, lots of talk on Instagram, loads of videos on YouTube talking about this price, that price, the other, this model, this method, this technique. Guys, it's just absolutely insane. I think ultimately what we're seeing right now is Bitcoin's becoming more and more institutionalized. And the more institutionalized this becomes, the more regular and kind of more acceptable to other tools like Elliott, like Wyckoff, things that have been around for an awful long time. It's all to do with the human emotions and the psychology behind it rather than the technical analysis. People often say to me about Elliott, they say, oh, well, how do you know it still works? And this, and this. And I think, what we're looking at is something that's so ingrained in human psychology that I don't think it's going to change even with bots, because the programmers are actually programming to utilize the same things: Fibonacci levels, key resistance, and support. And that's really not going to change until us, as humans, actually come along and change. So I don't think that's going to happen anytime soon. So I think for me, that's the first setup. So if we assume that we are currently A to B in a larger time frame move, what we then have to look at is what's the next potential? Where's the next kind of moves? Where are we going? Why are we going there? And I think it's just kind of defining that logic. So I think the next thing for me is to take this as the assumption that we could potentially have already seen this monthly 3. We are now going A, B, C, and then we will get, a big, big rally up for a monthly 5 if we assume that what we've just seen on the Weiss wave could actually be classed as the monthly move. overall. Okay, so what I'd like to do then is drop down into the weekly, and then what I'm going to do, I'm going to come back to what I've just shown in this post, and I'm actually going to show this from, like I said, the 26th of March to show what we've actually done, right? And the reason that I'm not overly excited about the current move up. Okay, so I'm just going to stick this on here, come down to the current weekly forecast, which takes me back to March. And as you can see, we've come all the way into the box, pretty deep. And I think right now we are testing, the upper side of this. You are going to get a bit of hype. You are going to get a little bit of momentum and movement. It's kind of false to the real move. Now, my question really is whether or not this was the weekly or the monthly three. And I think that's still quite a big question mark for me as a whole. Okay, so that's really what I'm looking at to start with. Now, the next thing is from here, we want to start looking at the potentials for the moves with inside the moves. So, what I'm going to do, I'm going to take this off and I'm now going to put in the potential scenarios that we could actually see. Okay, so let me come up back to the bigger time frame. So, if we look at basically the monthly time frame, what we've actually got, whether it's weekly or monthly, what we've actually got here is a couple of potential scenarios. So I've highlighted these just to kind of reiterate what the potential scenarios are. Now, if we look at something like a zigzag, we'd expect this move down to be 5. We'd expect then a 3 followed by another 5. And therefore we would get, relatively lower low. As long as we don't take out this being the 1, then we could come all the way down around the 20,000 mark and still actually, but I think it's a little bit lower than that. But I think we can actually be there and this still be valid as a zigzag move. Okay, so that option still has to be clearly defined, clearly put on the table. Now, at the moment, we've also got the room for a flat. We could see a 3 move down, a 3 move back up, and I'll come into this in the smaller time frame, being the weekly, in a second. And then we've also got still the triangle move, which could be 555. I just don't see that happening. I don't think this is going to be some kind of ending diagonal as a whole. So I'd like to stick with the first 2 options to start with. Now, don't get me wrong. I don't feel that this is ultimately just a negative scenario. I think every market needs to have a little bit of a breather, a little bit of a reset. And I think that's really all we're doing right now. This has been a massive, massive bull run for years and years and years. And I think we've actually now got to a point where we're just taking the breather. So stepping down onto this weekly time frame, this is the bit that really kind of gets to me. This is the bit that I've tried to decipher in a couple of different ways, using a couple of different techniques. Now, the fact that we come down and hit the 30, which is what I was looking at in March, makes me feel that it is more and more respectable. It's very respectable to both the Elliott cycles as well as these Fibonacci extensions and retracements. So I think first things first, if we come down and we look at these particular moves here, it's this box that I'm starting with, that from the initial drop, we have this, which is where the big question mark is for me as a whole. Now, if we were to assume that we're impulsive coming out of this move, now I've seen certain people count this where they've had the 0, they've had a 1, they've come back for a 2, this potentially being the 3, 4. Now, I've mentioned this in a couple of my past streams. The problem you have with this is, let's assume that this is the case. Okay, now let's give them the benefit of the doubt. And let's use this as the potential example. We're going to be looking at a move that looks something like this. Even at a 4,618 extension, we'd only go in practically to the all-time high if this is the case. So in some regard, it's almost the worst case scenario right now. That is the outcome. And I kind of feel that whether or not we are bullish, it's kind of anybody's guess overall. But I'm just suggesting that if we are bullish, we're only bullish to this kind of level, 65, 72 maybe, before we get the confirmation of the monthly 3, giving us a much, much deeper drop down in terms of the bigger picture. So I think that's going to scare a lot of retail traders overall. Now what I'm going to do, I'm going to step into the daily time frame. Now, in terms of the current daily situation, what I'm looking at on this is that we've actually got, from the box that I've just drawn, we've actually got a couple of scenarios that I want to really try to pin down in terms of these. Okay, so what I'm going to do, I'm just going to highlight the box a second. I'm going to turn this off, and I'm going to use the zigzag indicator once this loads up. I'm going to use the zigzag indicator to actually give a little bit of a bias. Just make sure these are clicked. And this one there. And what I'm trying to do is to kind of cut out the noise in terms of the, let me get rid of the waste one to start with. So I'm just trying to cut out the noise in terms of the price. Okay, so this clearly defines, the zigzag indicator clearly defines the highs and the lows and gives me the swings just for me to identify, where we are, where I think we are. So if we come down from this first move and we look at the all-time high, giving us the A followed by the B, followed by the C. Okay, so that's the big move. Now, that bit is not really in question. It's only the box that I'm looking at. So what we then have to do is to actually start to label and count where we are in the actual patterns and in this move. So we have a one move here. We've got another one there. So it's 2, there's 3, there's 4, there's 5, there's 6. Now, even if we assume that this was indeed the 4, we've only got a 6-leg move in a corrective manner, giving us 9 overall. Now, the problem with that is that if you go back to the rules that I've just put out in terms of Elliott, it doesn't fit any of the diagonal patterns. It doesn't fit any of the flat patterns, and it definitely doesn't fit the zigzag, even a zigzag, double zigzag, so a combo type move. So for me, that's the first problem with assuming this being the 4 is now in. Now, the second thing is, if we assume that the 4 was in, I would assume this now giving me the 0 to 1 move, so the 1 being here. This coming back for a 2, so that actually does fit, again, as I've said in the last couple of streams. The next problem I have is that 3 you'd expect to be pretty impulsive rather than pretty curved. Okay, now that for me does feel that that isn't giving me much confidence in terms of the much bigger play. Okay, so that's really where I stand right now. The next thing to look at is how we can take this kind of one step further and look at where we are now on the smaller time frame. So I'm going to stick this one on instead of this one, and I'm going to look at the much bigger play in terms of this being a 1, 2, 3 or an ABC down, giving us this, which was the obvious move. Right, now the next thing we have, and the next potential that we have, is if we were to assume some kind of expanded flat, then ultimately the expanded flat would look something like this. Now, if we were to run from the AB to the C, some kind of extension, I'd be looking at the low. I'd come back for this, and I'd come back and check this just to give me a potential forecast on the A leg as a whole. Okay, now the problem is, again, for me, we've hit basically the 2, so that could easily be fueled by hype, the fear of missing out and all this kind of stuff. It is a very, very sought after instrument, and I think a lot of people are still assuming this is the one that will make them all rich. So I think you're going to get this type of move, you're going to get this extension, but I genuinely feel that that extension was kind of the end there. We might pop back up and test this, giving us a double top, but I think if we then start to look at some indicators, just to give us a bit of a feel in terms of where we are currently sitting, then I think I'm going to use the stochastic, because in essence, I strongly believe that we are still in a corrective move. and I'll come on to this again in a second. So, in terms of the stochastic, I think the first thing for me is to look at where we are again, kind of from now the smaller picture out to the big picture. On a daily time frame, we're already sat in the overbought situation. So the fact that we are now overbought, potentially creating this double top, would mean I'd expect another push back down. And I think overall, if we were to come off the top, giving us a double top, then I think we could easily see another 40, 42,000. I think if we drop below 40,000, 30,000 anything, then I think there's quite a bit of space to come down to around 34,000 pretty rapidly. I think there's going to be, again, lots of fear fueling that particular move down. So that I think is where we are now. The reason I said I'll come back to touching on the stochastic, another thing that I get quite often, especially within the Discord server, is people like to use RSI. And I really, really want to emphasize what RSI and stochastic do, how they complement each other, and how they are very, very different. So if you jump across to the investopedia.com, look up the difference between the RSI and the stochastic, it'll give you a nice little bit of a summary as to what it is, why it is, but scroll down to where you see the bottom line, and you have to realize that the stochastic is more for the corrective moves as a whole. So this is the choppy market. This is where I think that we are right now. And the RSI was actually developed as a speed of price movement, which means it's perfect for trending markets. But I just don't feel, as someone that have used these types of indicators for over 20 years, I don't feel that the RSI is the perfect tool in this choppy market that I genuinely feel that we're in. So what I'm going to do, I'm just going to stick on now the RSI just to show this in terms of what the differences are. And, you are going to pick up some, obviously. You do have to bear in mind that this is also a lagging indicator, which most of them are. But I just feel when you combine this with a trending market and knowing that we are going from a, two to a three, or from a three down to a four, they're just completely different. And I think when you start to understand where to use them, where to apply them, how to apply them, it'll make an awful lot of difference, overall to your trading. So I'm just kind of the opinion right now that using an RSI in this choppy market is almost as much use as using an ejector seat in a helicopter. It's just the wrong thing to do, guys. So I think for me overall, this is what I'm seeing. I think that kind of the actual sentiment or the bias is still pretty much the same as I've been all the way from March. I know it's not what most people want to hear. I know this video will probably get a lot of dislikes based on not saying, hey, we're off to the moon right now. I just want to give some real logic as to where we are, especially on the roadmap, why I think we are there on the roadmap. And if I am wrong, and ultimately this is only now giving us the 3 of the monthly, then the 4 still needs the B to C move down before we actually start taking off properly. So I think it's just a question of a little bit of extra patience, kind of hold your hat, and then from there, I think we can probably look at some moves to the upside. So I hope this makes a bit of sense. I hope you enjoyed this one. I hope this is actually recorded on TradingView as well as YouTube. And if not, I will try to upload this video later on. So I'm not going to spend any more time on that at the moment. I'm just going to leave this and finish off where we are. So have a great rest of the week. Enjoy the rest of the day, and we'll see you in the next couple of streams. Cheers all.